And waiting to go live. Are we live? Let's see. And we are live. What's going on, everybody? The markets are about to crash. I say that because markets are at all-time highs since the last 4 years. Never been as high before. So this is the highest it's been. And what usually happens when something keep going up, eventually it goes down. Um, so yeah, it happens all the time. Right now, everybody's being greedy. People are buying at the top. Um, I've been watching a couple stocks the last couple days, and I see it reach all time highs. And people just keep buying at the top. And at some point in time, people are gonna dump. So when that happens, market goes down. Also, coming up is a few economic events that's gonna have a huge impact on the market. So a lot of inexperienced retail traders don't know this, but high impact events make the market fluctuate. Doesn't mean something's gonna go exactly down all day or it's gonna go up all day, but it will close out some trades if you have some stop losses at certain points. So Friday is not too many economic news coming out. Just one, that's durable goods. It's a high impact event, but that's coming out at 8:30 in the morning. Then you got the rest of the trading day. So things may be down. Friday is usually a sell off day going into the weekend. 'Cause people don't hold trades overnight. So usually Friday is either stagnant or people sell off. So you expect something to go to the downside. Now Tuesday is the job openings, high impact event, but doesn't really have that much of a, I would say, like long term effect on the market, like what's going on Wednesday, which is the Fed rate decision day. So 2 o'clock, 2:30. Do expect volatility lead up to this time. Also, the end of Tuesday, the trading day. So those are the three trading days coming up to look out for. To be careful when you're trading. Trade smart. Do not trade around these events if you don't know what you're doing, and don't think that things are going to keep going up forever. Because what comes up at some point in time, it can correct. That doesn't mean it has to correct, but it can correct. So be wary of that. But if you want to find an economic calendar, you got to use this one. You can use any economic calendar. Just make sure the one that you use do have a filter, so you can filter out like co- countries that matter. Like I mainly focus on the U.S., but other countries do have an indirect impact when they come out with their economic events. So just keep a lookout for that. So next thing I want to talk about is Trump. So at first in the media, there's some sort of tension or beef going on with Trump and Jay Powell, which is the Fed chair, current Fed chair, and it was talks about him firing the Fed chair and things like that. But they met today. Trump went to go see what's going on with the Federal Reserve, and from the news reports, it looks like he's like what he saw. So he not pushing to get him fired or get him removed, and his term is ending soon. His main concern, he just want to see interest rates lowered. And one of the reasons why he want the interest rates lower, because right now it's hard for people to buy a house because it's high interest rates. Interest rate right now, last time I checked, was like 7.5%, and 2020 was at like 2%. So imagine something going from 2% to 7%. Now you're trying to buy a house, you paying extra on top of that. So it's hard for people to buy a home. And let's see what else in the headlines. U.S. did a trade deal with We the Woo. Um, the 5 cent meme stock just made 15% of trade. Oh, this looks interesting. I didn't see this today. Let's see. 5 cent meme stock, 15%. What is that, like 30 cent or something? 25 cent. Healthcare triangle trading volume skyrockets. Meme stocks. Let's talk about that really quick. Be really careful when you trade in the meme stocks. They temporarily go up. You don't know when they're going to go up. They could go straight to zero. Who knows? But be very careful trading these stocks. I wouldn't recommend it. I know sometimes I play around with it because I got the money to lose. But be very careful. Don't go all in on the money you can't afford to lose. And do know that it's a short squeeze. Hint, short squeeze. So that means it's a short term trade. Don't think you can invest in this thing forever. It's going to go to a holler. You hear me? For example, GameStop at some point in time it was worth $500 a share. Look at it now; it's only trading around between $20 to $30 a share. It's people who's holding on to it for the long term, and they lost millions, hundreds of thousands of dollars. So don't be one of those people who think meme stocks is going to be the future, because they are meme stocks for a reason. They're being shorted for a reason. So look into the financials, people. Speaking to the financials, let's talk about Tesla financials. So Tesla is a very popular stock because Elon Musk, entrepreneur, business mogul. The company is doing terrible. It has no business trading at even $300 a share, and it's down 8%. I feel like it have no business trading at $150 a share. Compared to Tesla competitors, Tesla's at the bottom of the barrel when it comes to profit margins. Revenue haven't been increased in the last 2 to 3 years. In fact, they are losing money in sales. Their Cybertruck isn't selling as well. When I checked, the cyber sales decreased about over 50%, so that's not good. Also, it's a rumor out there that they're losing the government tax credit, and that accounts for over 30% of their profit margins. So the revenue is one thing. So yeah, it's like 4% of their current revenue, but we think about profit margins. That's the money after they pay for expenses and cost of goods. So they'll be losing 30% of their profit margins once the tax credit is gone. That's a huge concern. Tesla will barely be profitable. Tesla just became profitable, what was this, about 4 or 5 years ago? So people who's investing in Tesla for the long run, who haven't really did the math, the financials, and the deep thinking about it, they're going to be hurt. And that's why Tesla is dropping right now, because the financials is a little shaky. And it's Tesla. Like, look at the chart. Let's go to the chart right now, as a matter of fact. Tesla, it has its ups, it has its downs. But overall, you can find a really great trading Tesla. Like, for example, I had a put option on Tesla. Prior to earnings, I made a few thousand. Just, playing the downside, because I know after earnings, implied volatility shoots straight down. Usually, investors hear things they don't like, and they sell off, which happened today. It went down over $27. So, if you look at the chart right now, Tesla is down like a shitload. Let's go to the 3-month chart. So look at this. It goes up, it goes down, it goes up, it goes down. You see these clean patterns, head and shoulders, inverse head and shoulders. So it's predictable. So it's down. What you think is going to happen next? At some point in time, after it sell off, people get out who want to get out. You have people who's going to buy back into Tesla. I feel like Tesla intrinsic value should be somewhere around like 150, probably less than that, because the PE ratio is pretty high on it. Shouldn't be trading nowhere near over $150, but people see a future in Tesla. They think within the next couple of years or the next 10 years, it's going to be more valuable. The way I see it, based on its financials, it shouldn't be trading as much. I haven't did a discounted cash flow model on it yet, but I feel like if I do, it'll be way less, probably 50% less than $300. So long term, I think Tesla is a short term. I think it's going to reverse. I won't say soon. I still think it's more room for the downside. So I'll just keep my eye out on Tesla. But I will begin to a call soon to play the upside. Probably not this week, maybe week after next. But I'm going to keep my eye on it. And let's see. Seen some other stuff in the market. So this is going to be a really short video. I just want to talk about some other things I see in the market. So we talked about Trump. We talked about Tesla, the economic calendar. So I'm in a few trading groups. I've been listening to other people talk, and they doing call out. This is company ticker symbol CCJ. I don't know too much about it. I just heard of it today. Cameron Corporation. I know a lot of people trading it. Let's see. Let's wait for the chart to load. I'll have to do my deep analysis later to look at the financials and read the 10K form. Uh, First thing I do when I first learn about a company, copy and paste it. I go to Bing or Google. I just throw that right into my URL. This is how you do like your own research. I know a lot of time you hear the gurus online say DYOR, do your own research. I'm going to show you how to do it. So you do this. You see what the search engines say. See what analysts are posting about it. I'll go to news. Before I even go to their website, I'll go to news to see what's the headlines. So Jim Cramer is posting about it. Anytime he posts anything he posts about, be careful because he be making the wrong calls 24/7. I say Cameron's 80% 3-point game, maybe just to start. Okay. So there's so much you can learn just by typing it into Google or Bing. So then I click on it and I go to the website. I see what is this company about. Do they have a clean web page? Is it a B2B or a B2C? What type of product does this company have? What type of image do they present? Before you invest into a company, you have to understand what do they do. At least know something. At least visit their website and see what they're about. So go in here, scroll down. Okay, so it's not a type of business that you click on to buy something. So it's not an Amazon. From the looks of it, look like a B2B type of business where it don't really work directly with consumers. And yep, I'm right. One of the largest global providers of fuel needed to power a safe, secure energy future. Okay, so like some sort of energy company. Is that uranium? Okay, got a bunch of employees. Oh, that is uranium. So like they make process uranium or something. Got uranium products. Well, I can't buy it. I guess I got to be a company to buy it. Fuel services. Okay. Uranium operations. They must have really good Q2 earnings. Okay. So to learn more about this company, let's see if we can go to their 10K form directly from their page. Is it easy to find? I think this is it. Come on, take me here. So what I'm looking for right now is something called the 10K form. So the 10K form is an annual report. It tells about the business model of the company. It tells about the financials for the past year. It tells you a lot, pretty much the ins and outs of a company. Everything you need to know about the company is in that 10K form. It's an important thing to read before you go invest in or degen into something, thinking like, oh, it's a great company. I did my research. Just looking at the website, looking at a couple news reports is not real research. That's degen research. That's like they would call it dummy math, like 2 + 2 = 5. You have to actually read what the company is about based on what they put out there. The SEC exists for a reason. They make sure that all the information that you need to know about a company is presented by the company. And they don't guarantee that everything's up to date or accurate, but they just make sure everything you need to know is there to a certain extent. So you can just go on Google, type in 10K form, and do your own reading. That's what it should be. Do your own reading, not research. That's what the R should stand for. Reading. All right. So that's Cameo. What's another company I heard of? SPX. So I'm surprised all the years I've been trading, I haven't even heard of SPX. I heard of XPY, but the trading group I'm part of, they trade dailies on SPX. So daily option contracts that expire within a couple weeks or the same day. And they catch these swings because apparently they have a bunch of swings in the index. It goes up, it goes down. Like right now, it's super low and it's Friday. So, me personally, I wouldn't touch it. Someone who's more experienced, trading with a lot more money, they probably would hop in really quick. Um, I think it's a good thing to trade. If you don't have the funds to buy at the money, you do have SPY, which is a little cheaper than SPX. Similar thing, just less volatile. I mean, it's still extremely volatile. And it's another one, SPX, XPY. I think the simple one is SP. Is it SP 500? I don't know. We'll look into that later. But XPX is one that I think that'll be a good trade. Something to add to the watch list. Just watch it, paper trade it, practice with it before you use real money. And yeah. So I want to talk about some of my current positions I have that I'm holding. So it's this company called GEV. And about 2 days ago, I look at the chart, I read about the company, and I seen that it is way overbought. So what do? I do my analysis, Fibonacci retracement to see where can this thing particularly correct that. Make sure it's overbought. Okay, cool. Look at the intrinsic value for the company. Look at the PE ratio. Do all my math and everything I needed to do. When I look at this just from the chart, and let me go to the advanced chart on this because I'm really deeply involved in this company right now. This is way overbought. It could go up another 10, 20%, but it did slow down. The highest it went yesterday was $633, and it kept testing resistance. It won't go nowhere above $631, and even today it reached as low as $615. So I got in at the price on $631. When it's correct, I believe it's going to correct to about $590. That's an easy $500, maybe $1,000, depending on how fast it go down. So I look for opportunities like this in the market where earnings just happened. It's still been overbought. It slowed down. I short sell at the top or buy a put option, and I just sit there and I wait. I do a swing trade. I hold on to it for at least 3 to 5 trading days, and I wait for it to go down to a certain point. Now, once I make a 20% profit, I get out. Sometimes I let it ride. I'll put in a stop loss a little bit above my entry point, just to make sure I profit something, and I let it ride. And doing it like that, I will always be profitable because I'm making sure I'm locking in profits above my initial cost of my cost basis. And cost basis is just how much you put in to get into a trade. So the premium I paid was about $990. So I'll break even when this company drops like maybe 560 or something. But I'll be way out before then because all I want is a 20% return. That's it. I'm out. I'm moving on to the next opportunity. Because you don't want to stay in a trade too long because you'll lose money. Because this thing could go up. It could go down to 595. Then after that, it can shoot right back up to 631 and go past that maybe to 700. Who knows? So you got to be very careful. Stick to your rules. And don't be too greedy, Once you reach a certain target, get out. Move on to the next opportunity and wait for a perfect trade setup. And I believe the trade setup I got into yesterday was immaculate. I waited. I didn't jump in at the bottom or when it went down. I waited till it started stagnating, and I got in on a put option. Tesla, we already talked about that. Put option, call option. CrowdStrike. So CrowdStrike is a little bit more complex. It goes up, it goes down. Beginning of the year, I did lose some money on this one. Earlier this week, I'm like, okay, let me get a call option. And I got the call, made a few $100, and I got out. Someone asked me, is 20% a good profit? 20, hell yeah. Most portfolio managers, they will say, hey, the average return is about 9 to 10%. They'll aim for that because that's the average return. If you was to invest into the S&P 500, you'll get 9 to 10% a year. You get 20% in a week or a day, you beat the benchmark. The goal of investing, like picking your own individual stocks when you're not investing to an index, is to beat the benchmark. The benchmark is 9 to 10% a year. You make anything more than, how we even divvy that up, 0.02 a day, like 0.02% a day. You make more than, let's just say 1% a day for simplicity purposes. You make more than 1% a day, you are beating the benchmark. Because at the end of the year, you will make 365% if we add that all up. You see what I'm saying? So make it 20% in a day. That is like even 10% a day. You don't have to go for high profits. Aim low. Because you be too greedy, that's how a lot of traders lose. 8% is even good. You could be super conservative on this. You don't have to go for a 50% return or 100 or 300% return. Because if you think about it, 20% a day of the previous day is compound interest. So 20% of 100 is 120. 20% of 120, what is that? 140? If I'm doing the math right, I don't know. Then you just keep adding up like that. After like 4 or 5 months, you have a few $1,000s because you keep getting 20% of the previous amount that you are accumulating from. So think about it like that. It all adds up. All right, let's see. So I talked about CrowdStrike Call, GD Call. So it's this another company, GD. I'm not going to talk too much about the companies, General Dynamics. You can do your own research on that. Or I should say do your own reading. Got a call option on this earlier in the week, and you see what happened. It went up. I got in. I got out 20%. I'm good. So GD, and it kept going up. Cause I got out probably right around here or something. I don't know. Then it just kept going up. But when something keep going up, I don't think like, dang, I should have stayed in. Oh, let me get back in. Like, no, I made my 20%. I move on to the next trade. So you got GD, Apple. So Apple was one I was holding on to. The thing with Apple, it's not as volatile as other companies. It's more stable. So I was up about, going into Monday, I'm up about $100 or so, right? I see other better opportunities. So what do? I get out, I get into the other opportunities. Now, if I was to held on to Apple, I'll still be up because I got in when Apple was about 212 or something like that. But you have to understand, when something kind of stagnates and stay at the same price for the entire week. So today is the 24th. And let's go back to 23rd. So let's say if I was to get in here at 212, and now it's a whole week later, and it's at 213. So even though it's like $1 more, the theta on that is, the delta on that is probably about $30, right? So I'll be up $30, but also you have theta, and we call that theta decay. Theta decay hit the value of your option contract. So that means that if theta is 15, you'll lose $15 pretty much like a day on that contract. So you do the math, you lose about, in a week, that's about $60 that you'll be losing. So if something not enough enough volatility, you won't make that much money when it comes to option trading unless you do a day trade. So Apple isn't a good one to hold on to unless you go on long on. If you're doing a short-term trade, it's not a good one. But if you're doing long-term, let's say 3 to 6 months out, you think Apple is going to go to $220, cool, do that. Or if you're going to buy Apple at 220, if you believe it's going to go to $500 within the next year, cool, buy a leap. But it all depends on how you want to play it. So Apple, that's a good one to keep an eye on because I feel like it would be a better opportunity to enter into Apple. I feel like it's going to kind of reverse to the downside sometime next week or week after next because of the economic events that's coming up, and it'd be a good, you can find a good entry point to get into Apple. But right now, I wouldn't enter Apple at 213 unless you're doing a super short-term trade and waiting for it to go to 315. But in order to do that, you got to buy like maybe 5 or 10 contracts if you have the funds for that. Then you have United Health. All right, United Health is another one, just like CrowdStrike. So after doing further research on United Health, I would honestly warn people to try to stay away from this company, because it is a lot going on. The DOJ doing an investigation. Something happened with the CEO early this year, and this stock just been doing terrible. It just been going down nonstop. Just had no chills like all year. So it reached all-time highs about April 11th. After that, it just been going down, and I thought it was over. A couple months later, come June, do a trade, it's still going down, and it has some days where it corrects. I would call it a correction. It be oversold. People who see value in it is gonna eventually buy it, but it just keep getting lower and lower and lower. And if you look at United Health, like, what is this, the last 20 years? Look at it. It just keep going up, just skyrocketing, And I don't even think it's something fundamentally wrong with United Health. I think it's because all the bad news that's coming out, some sort of scandal or something that's happening, and it's causing the stock price to be driven down. And it's smart. If there's a lot of stuff going on, the company could be fined billions or even millions of dollars. It's smart to get out. But if there's nothing fundamentally wrong with the company, then it'll be smart to buy something that's undervalued, right? And as of right now, I'm not for sure if it's undervalued or not. I will do my research after this video just to see, like, okay, what is the intrinsic value of this company? But if it should be trading way above $300, then this is a hot buy. But this is something I will be playing a call option on, going long on, because I feel like it's way oversold, and that's based on bad news. So at some point in time, it's going to correct. And when it correct, that's an opportunity to make money. So Warren Buffett always say, be fearful when others are greedy and be greedy when others are fearful. So right now, I feel like it's not the right time to be greedy because it may be more room for the downside. Depends on how the investigation play out. So that's something we don't know. That's a variable where it won't be smart right now to get into a long-term call option or buy a leap because we don't know how the investigation is going to go. Like, this stock could drop another 20 or 30%. Who knows? It could go from 278 to 158. Then once to do that, you got thousands of dollars. So I'll play it by day and just wait till all the investigations are done, then try to see what's going to happen next and keep your eye out on it. But I think United Health is a good one to keep on your watch list and keep your head on the swivel about. And I think that is all I have for today. So we talked about United Health, Apple, GD, CrowdStrike. Tesla's going down, so be careful with that one. Good short-term calls, but long-term, Tesla's not going to do too well. Unless Elon Musk can make a pivot, but who knows what's going to happen. He's a wild card. XPX is a good trade. What else? CCJ, that's one to look into. Talked about other companies still on market share for Tesla. And Tesla is the bottom of the barrel when it comes to like profit margins in the EV industry. And that's all I have for y'all tonight. So we're going to go live again Sunday night at 8 o'clock p.m. EST. So make sure you tune in. Leave a comment. Let me know if you like the video. You have any other stocks you want me to talk about, do research on, and I can come back Sunday and we can talk about that stock. Other than that, I hope y'all have a good night and good luck trading tomorrow, and hope y'all make a lot of money.